It's end of March and fast approaching April. So if you are an investor who wants to invest for an income, so you can pay those monthly bills. So I have these two, closed-end funds that are on tier right now. They're doing great. So these are the two I'm going to go through the performance and the dividend that they pay, and why you should even consider buying them right now. The first one will be Dividend 15 Split Corp. I've made a bunch of videos about this ETF. It's split fund, basically what it is. You can see right now the price right now is 564. It went all the way down. If we look at the 6 months, it was all the way down to like almost $3, right? Or less than $2, less than $3 actually. And then you can see within 6 months has gained about 42%. So Dividend 15 Split Corp right now is on tear right now. It's almost approaching $6, because if we look at the before, it was actually at $7. So right now, if we look at the 1 year since or 52-week, it's down about 24%. But if we look at just 6 months or a year to date, it has returned about 6%. But if we look at the 6 months, has returned about 42%. Another one will be Dividend Growth Split Corp. This is from Brompton, and this is one of the just newly restructured, and I'll show you what it has, what holding this it has, and what changes they've made. I also made a video about the on this one. If you check my videos, you'll see that one, or you can check link below. So if we look at the 6 months, this one has gained actually 45%, and if we look at the year to date, still 20%. So this has done way better than DFN. If we look at the 1 year, it has gained about 20%. So it's a pretty good. But if we stretch further, 5 years, it says share not available. If we stretch max, we can see it has lost about 56%. But again, this is just a chart, does not include the dividends that this fund has reinvested, or if you're an investor who receiving those dividends and reinvest those dividends. Now let's look at the composition of these two split funds and see what changes they have and why you should consider buying them. So we'll start with actually Brompton Dividend Growth Split Corp, which is DGS. Again, I always bring this type of update and news and comparison between ETFs. So if it's your first time, just make sure you subscribe, and if you like this content, just make sure you smash that like button. We look at closing price right now is 613, and we look at the NAV, or net asset value, is 591. So NAV, because these are closed-end funds, so they also, the price is mainly also dictated based on how traders are buying and selling. So we can see here NAV, it's a little bit on the expensive side, because the NAV, net asset value, is only 591 and you're buying at 613, so it's a little bit pricier, right? But we look at the distribution rate right now is about 20%. Management fee, this one is 60.6. Unit NAV is 1594. This is very important, because if the NAV is below 15, then you don't get the dividends, but as long as above 15, then you will get those dividends. DGS, what it is, of course, is a large cap portfolio, primarily Canadian equity with a high dividend growth. But this one actually, it says Canadian ETFs or equities. Actually, there are a lot of international. I'll show you. There are a lot of other international companies that include in this dividend. This is one of those changes that they've made, right? And then, of course, if we look here, there are preferred shares, and also they have preferred share and Class A share. So the one you're buying right now is Class A share. Preferred share is more of like a bond. It does pay very low yield, but it doesn't fluctuate in price as much. So the one we're talking about here is Class A share, is what most people who are watching this video will be interested to buy. If we look at the portfolio composition, so it does have, so if we geographical location, 100% is Canadian, and they have other assets. So there's -2 other asset liability. We look at a sector location. There's a financial, industrial, energy, investment funds, consumer discretionary, consumer staples, information technology, utility, other assets and liability. So whenever they do leverage, that's what it is here, -2. There's material and there's real estate. If we look at the main holdings, 25 of them, will be Brampton Global Dividend Growth. So this one actually, this is an ETF. It's a house ETF from Brampton, which does have international stocks in this one, including US companies and some European companies. So that's what I'm saying. This fund is not 100% Canadian. Yes, it was 100% Canadian before, but they did change and they put almost 10% of this ETF, DGS, is invested in this ETF, which is a global dividends growth. And then also the rest of the companies, you can see West Connection, Restaurant Brand, Thomson Reuters, Manulife, Dollarama, Alimentation Couche-Tard, Canadian National Resources, AI Financial, Loblaws, Royal Bank of Canada, Hydro One, Stanton, Constellation Software. This is a great company, by the way. And there's IRC Resources, all these bunch of companies, Canadian Pacific Kansas, which is, it's Canadian, but invest mainly in the US. National Bank of Canada, Bank of Montreal. So a lot of banks, and is very diversified. So I like this. These are 25 companies, right? Represent about 92% of the portfolio of this fund. If we look at performance, I've showed you performance on Yahoo Finance. So this actual performance includes the dividends that they reinvested. So since inception has returned about 9%, so it's per market almost. But if you look at the 10-year stretch, has returned with this Class A share, has returned about 10.8, so almost 11%. So that's bigger than the actual stock market itself. So that's a pretty good return. In 2013, for example, it returned about 50%. In 2019, it was 70%. But other years, like if 2018 was minus. So that's performance of that one. And we look at distribution, they've been paying distribution, and distribution is about 10 cents. So that represent at the current price, represent about 20%, right? And then the last payment here is going to be payment date is going to be April 12th. That means they have already declared the dividend, because you have to go on a record on the 28th. So right now it's 26, March 26. So if you were buying, you should have bought maybe 2 days ago. Then it would have been a record. But if you haven't purchased this share, I'm afraid it might be too late right now. But anyways, if you want to buy next month, just make sure just before end of the month you buy, and of course that's the next dividend. But they've been paying dividend is about 10 cents at any all time they pay. And now and then, if the fund deep below $15 or 15 combined net assets, sometimes they cut those dividends, and I've made a video to show you what the cut was in the past. So that's it about dividend growth split. Now if we go to DFN, I'm not going to go deep on this one because I've made a bunch of video about DFN. So DFN is pretty much the same. It's a split fund. It has Class A share, and also it has preferred share. But for most people here are interested in Class A share, because this is a share that pays a massive dividend, and we can see the current yield for this one is almost about more than 25%. So, and then the stocks that they hold, this one has only 15 stocks, because you can see dividend 15 split, meaning they only invest in 15 stocks. And these are Bank of Montreal, Bank of Nova Scotia, BCE, CF Financial, CIBC. So mainly banks, financial companies, insurance companies. And they do have other, for example, communication, TELUS Corporation. And they do have energy company, for example, TC Energy and TransAlta. This is, of course, gas and pipeline companies. They do have a little blend, but it's not as diversified as DGS that we've seen, because that one has 25 companies, but also it does have it also has this ETF, which is composed about 10% of the portfolio. So that's a DFN. What's NAV right now? Right now the NAV as of March 15, 2024, it's 15.27. So this is pretty good, because is again, if this NAV deep below 15, they won't pay those dividends, but as long as above that, they will pay the dividends. So that's it for these two split fund. I just want to bring you up to the speed to know what's going on with this ETF and why they're on tear. It's because of market is doing great, and so they do pay dividends. So if you are considering investing in these one ETFs, those are two for you. You can invest a split fund if you don't want to invest in cover call ETFs. So that's all for today. Just make sure you subscribe and hit the like button if you like this content. Till meet again next video, which is coming soon. Bye bye.